Today, folks, we're discussing one copper stock with major catalyst as people are under recognizing this commodity as the electrified metal of tomorrow. People keep forgetting how much we truly use copper in our day-to-day lives, and I can give you a few examples with first and foremost AI facilities. Microsoft's facility in Chicago, these massive data centers can require thousands of tons of copper, with some estimates placing the figure at 27 tons per megawatt of power capacity. Wind, I mentioned this tons of times, guys. A single onshore wind turbine can use 3 to 4.7 metric tons per megawatt, let alone EVs that require up to 180 pounds versus an internal combustion engine that only uses 40 to 55 pounds. And the reason that I want to discuss this one copper stock today is because it has catalyst, it's starting to produce, and it can in the future produce up to 8% of the United States supply needed of copper. Because right now, 50% of the copper supply roughly is being imported. And with the new administration focusing on building out internal growth, I think this company has a lot going for it. It's called Gunnison Copper Corp, trading on the TSE under GCU, the OTCQB under GCUMF. Keep in mind, Gunnison did reach out to me. This is part of sponsored content. I'm going to leave the disclaimers in the description below. Of course, these are opinions of my own. They do not constitute investment advice. This is for entertainment purposes only. But if you're on a path to financial independence, if you love exploring undiscovered sectors of the market, go hit that subscribe button, folks, because this one definitely deserves your attention. For around 100 million in its market cap, it did get a little bit of hype coming through the summer into the spring and has been flatlining ever since. But with this near-term production online and future catalysts that are going to allow this company to produce 8% of the US's supply chain, I think there's a lot going for it. So let's dive into it with first and foremost analysts. Analysts such as Cashew Research have been actually raising the price targets on this company up to 70 cents coming out of Cashew. And if we just take a look at the broad view of the projects, which are located in Arizona, there's a lot going on here. There's a lot of blue sky opportunity, but there's two main aspects of this property we're going to discuss, which is the Gunnison property and the Johnson camp. Now, the Johnson camp is the one that is near-term production ready. It's way ahead of schedule. We're going to talk about that first, but I want to point out the net present value from the recent PEA, which was 1.3 billion. That was the net present value on this Gunnison project, with a 21% IRR at $4.10 per copper. And copper has been holding up quite materially, and likely with the supply and demand mix up here and all this demand for AI and data center builds out, it's likely that that price could even continue to increase. But again, let's zoom in and just talk about the catalyst between these two properties. I want to scroll down because research here done by Cashew actually highlights what we can pay attention to with the business model with phase one, which is the company is focusing on generating initial revenue from this Johnson camp mine. This phase is to de-risk by a partnership with Rio Tinto's Newton, which funds the capital cost in exchange for testing its technology. And then the second, the long term, the company's ultimate goal is to develop a much larger Gunnison project open pit mine. And this phase, targeted by 2030, will require 1.3 billion in capital and aims to generate significant long-term revenue. If we just dive down into the news recently, and again, I want to talk about this Johnson camp mine first before we focus on Gunnison. The highlights, again, this is, early production, right? They announced their first copper production here. And if we just read into the highlights, this was achieved ahead of schedule. It's exceptional safety performance, critical U.S. supply with new domestic production strengthening Americans' energy independence. The partnership, as mentioned, with Newton and was awarded $13.9 million in a 48C tax credit from the Department of Energy. And this growth trajectory is to ramp up in progress towards the nameplate plant capacity of 25 million pounds of finished copper cathode annually. And you can see some of the photos from the project here. But what I want to do is get the insight from an insider who was recently on CEO.ca. You can go check the interview out. But let's start with the Johnson mine first, because that's what we're seeing in production now. So take a quick listen.
This is the mine that we've been building with our partner, Newton LLC, which is a subsidiary of Rio Tinto. We've been building it over the past year. We started off with essentially, raw desert, at our Johnson campsite. And we built an 8 million square foot leach pad. We're going to be showcasing not only the Johnson camp oxide ore, right, which is something that's being processed with traditional technology, but we're also very excited and fortunate to be the first ever demonstration of the Newton process. This is a new technology that will be able to leach sulfide ore, something that's never been able to have been done before. This leaching technology, it's going to completely replace the smelter and refinery that's been needed up to till now to process sulfide ore. So we're really excited to demonstrate that. And we've shown that, we can construct and put into operation a mine. Rachel, when this mine was first constructed in the 1970s, it actually was one of the very first to demonstrate SXEW technology, which is the technology that can leach oxide ore and make it into finished copper on the site. And that's really important to us as a company. Gunnison Copper, we're very committed to producing a finished copper here on the site in Arizona.
Now, shifting a little bit to the Gunnison copper property here, again, there's been some recent news that they had some high value add work program at this property in the southeast Arizona. And there was a quote here saying these initial results are extremely encouraging, basically saying that if we read through some of the mineralization and the sorting results, that basically the sample, a half-ton sampling consisting of 2-inch to 6-inch pieces of PQ drill core from the Martin Formation collected as part of the Gunnison recently completed metallurgical drilling program. The Martin Formation is the highest acid-consuming rock type in the deposit. It makes up 44% of the resource base. The sample was comprised of 54% mineralized material and 46% internal waste, consistent with the overall Martin Formation. There was waste reduction. Over 90% of the internal acid-consuming waste was successfully removed. A lot of good numbers coming out of this, but again, I can't, exemplify how big this project truly is, and I want you to hear it from the guy himself that is actually on the floor looking at this. So just take a quick listen, and we're also going to hear milestone expectations to get a view of what we can expect moving forward.
I think that we've been really flying under the radar here at Gunnison. I think this is sort of an undiscovered gem to a lot of investors. We had previously pursued the Gunnison deposit as what's called an in situ leaching mine, and if you take a look at our 5-year stock chart, you could see, we were a 200 to 300 million market cap company when we were building previously this in situ leaching mine. Unfortunately, that technology didn't quite work out, and we had to put the mine on care and maintenance, which led to a significant decrease in our stock price. And you can see that in the chart. But starting in 2024, in December, actually, we went to the market because we had finally secured the land we needed to pivot the Gunnison project to a traditional open pit. And we released what's called a PEA, a preliminary economic assessment study, in December of 2024 that showed these robust economics of doing this as an open pit. And people have been saying for a long time, like, why aren't you doing this as an open pit? It's such a great deposit. And we showed that it could have an NPV of 1.3 billion, a 21% IRR, a 4-year payback. So it looks really great. And we said, yes, we know, but we just didn't have the land. So finally we got the land, and we've now pivoted it. It's only been about 8 months since that happened. And so we're just really getting the word out now to all the investors, and it's slowly but surely taking root, and people are starting to understand that, hey, this thing is now a traditional open pit. It's straightforward technology. It's a simple flow sheet. It's going to make the copper in the US. We're going to sell it in the US. So it's a really great deposit. And when you look at the valuation, because of the history, because of that in situ leaching approach and the pivot that was very recent, our valuation, we're trading at about a 0.1 times price to net asset value. And if viewers aren't familiar with that metric, this is a key metric to evaluating this type of company. And typically you'd see this type of company trading at maybe a 0.2 to a 0.4 times, having a PEA level study in open pit. Take a look at our peer group, right? Take a look at the other open pit projects in Arizona. You'll see they're trading at a 0.3 or a 0.4 times. So right there, that implies a significant upside as we're able to really, advance this project and prove it out to the market to be in relative to those peers. We're looking at a 2 or 3 or 4 times upside to get to that relative valuation that we feel that we should be at. So I think that's the main reason. The second reason is the Johnson Camp mine, right? You're getting that exposure. That is something that those other peers don't have. The other peers, they have some good projects too, but no one else has an operating mine that's going to be generating free cash flow and proving out this Newton technology. And then the third reason is, and you touched on this earlier, is exploration upside. So that's something that we've got in spades. And I think if you look at the whole package, it's really an attractive time for investors to get into the stock today.
At this point, I'll pass the question off to you. I'd love to know what you think about Gunnison Copper down in that comment section below. Let me know what you think, and consider subscribing for news and catalysts as it comes down the road. We will update you here. But on that, as always, I look forward to catching you in the next one.